Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this channel, we break down effective strategies that can help you take your Forex game to the next level. All right. However, in this particular video, we are going to be discussing the Octopus Trading Strategy. All right. In this video, we're going to be discussing the Octopus Trading Strategy. Okay, trust me, if you've been looking for a strategy that combines simplicity and effectiveness, then this one's for you. Okay, so you might want to grab your notepad as we get started. Now, the Octopus Trading Strategy is a unique approach that uses multiple layers of analysis, blending indicators, price action, and adaptive risk management. Okay, so you can think of it as an octopus with its tentacles. Okay, so you need to get the idea behind the name. All right, you can think of this strategy like an octopus with its tentacles reaching into every aspect of the market. Okay, so each component works together to give you a complete picture, helping you to make better decisions in your trades. Okay, now this strategy isn't just for pros, right? It's not just for the pros. Whether you are a beginner learning the ropes or a seasoned trader refining your strategies, the Octopus Trading Strategy is versatile, all right, and it's easy to adapt. Now, what's the best part? It works across different currency pairs and time frames, giving you flexibility in the Forex market. Now, let's just break this strategy down into its core components, all right? Now, here is what makes it tick. One, the multi-layered indicators. The strategy typically relies on a combination of moving averages, RSI, and stochastic oscillators. All right. So you might want to, begin assuming, or rather, thinking of how the strategy is going to be effective, because it makes use of popular indicators, right? And not just popular indicators, but effective indicators still. Okay. So I'm just going to be adding these three indicators to the chart: the moving average, the stochastic oscillator, and the RSI. Now, another component of this strategy is price action. Okay. Now, while these indicators help you to identify trends, overbought and oversold conditions, and potential market reversals, price action is still key. Okay, by studying candlestick patterns and support and resistance zones, you can refine your entry and exit points with precision. Okay, now another important component of this strategy is adaptive risk management. As usual, risk management is the backbone of any successful strategy. The Octopus approach emphasizes setting dynamic stop losses and take profit levels based on market volatility. Okay, this ensures that you're always prepared for unexpected moves. All right, now let's just talk about how you can apply this strategy step by step. Okay, the first thing you should do is to set up your chart, right? I already added the 20 period moving average, but I'm going to add the 50 period moving average as well, okay? Because we're going to be needing both moving averages. So here we have the 50 EMA, and here we have the 20 EMA here, and here we have the 50 EMA. Now, this will help us to identify the primary trend direction. Now, secondly, your RSI, you need to add your RSI with the standard settings. You can just leave it at the default settings, 14 period. It's going to help you to identify overbought and oversold levels. Now, you have to also include your stochastic oscillator to confirm momentum at potential entry points. Now, the next thing is to combine these with price action. Look for candlestick patterns like pin bars or engulfing candles at key levels of support or resistance. So pay attention. You have to set your support and resistance zones, all right? Whenever you identify support and resistance zones, you have to map them out, okay? Because those are going to give you confirmation points. For example, when we're looking for a buy opportunity and we find price bouncing off a support zone, the support zone is going to give us, an idea into the fact that a bullish reversal could be imminent, right? So right after we get that rejection, the moving averages are going to confirm that buy. As you can see, when the 50 EMA crosses, when the 20 EMA crosses above the 50 EMA, it's a confirmation for a buy trade. All right. So after getting that confirmation, we have to watch out for the stochastic oscillator giving us a buy signal, right? When the main line crosses above the signal line, and then the RSI trending upwards. If you have the RSI value above 50, then that's a good one, right? So you get your confirmations from the moving averages, the RSI, and the stochastic oscillator, in addition to price action. Now we can see that we got a bullish candlestick pattern around here, right? So when you get a bullish candlestick pattern right around a support zone, then you have a high confidence. You can have a higher confidence in that trade, okay? For example, here we can see that we had a somewhat, like a pin bar around here, this particular red candle, and then we had a bullish candle following afterwards. We had three white soldiers, right? You can see we had three white soldiers, consecutive blue candles. So that has a bullish candlestick pattern. And right after the three white soldiers, we can see we had a little pullback and we had a continuation in the direction of the trend. Okay. Now, finally, you have to adapt your stop loss and take profit levels based on the average true range. Okay. This ensures your risk management aligns with the current market conditions. Okay. So if you decide to enter a buy trade right around here, you can decide to set your stop loss below the support level, right? Just below the previous support level. And then your take profit target can be around resistance zones, or you can use the moving averages to give you, a sell confirmation, perhaps when you have a bearish crossover. You can also watch out for, the price, you can also watch out for the activity of the RSI and the stochastic oscillators as well. Now, by following these steps, you'll have a clear rules-based approach to trading that reduces guesswork and increases confidence. So why does the Octopus trading strategy work so well? It's because it leverages multiple tools to give you a comprehensive view of the market. By combining trend analysis, momentum, and price action, you are not relying on a single indicator. Okay, this makes the strategy more robust and adaptable to different market conditions. It's like having a Swiss Army knife for trading, right? Every tool works together seamlessly to help you make better decisions. Okay, now as you can see, the Octopus trading strategy is quite easy. It's quite easy to use, quite an effective strategy to use. All you have to do is, just pay attention to price action and these main indicators, all right, and observe proper risk management, and you're good to go. Okay, so that is a wrap on the Octopus trading strategy. Now it's your turn to give it a try. You can start by backtesting it on its demo account and see how it performs for you. If you found this video helpful, smash that like button. It really helps support the channel and lets me know you want more content like this. Okay, so don't forget to subscribe and hit the bell icon so you are always up to date with the latest trading strategies and tips. Let's keep growing together as traders. In the meantime, thank you for watching, and I'll see you in the next video.